All right, and we are live. Awesome. Gorillas, thank you for being here for this awesome presentation. It's open coaching for you guys today, but you guys have all been awaiting this presentation from Rachel and her team at Empire Tax Pros. I'm not going to give you too much info. All you need to know is that Rachel is here for your support and for you guys to provide an incredible amount of value. I actually met Rachel at a networking and marketing events in April, saw what she did, was really impressed with her platform. And once we got out, immediately reached out to her so that I could get more clarity on my own taxes and bookkeeping and accounting and all that stuff, because I definitely need that help and don't have any of those skills. And I can tell you that her process from start to finish has been awesome. They positioned me with the right plan that I needed for my business and are going to end up saving me a ton of money, but most importantly, as all of you who are here with me know, a ton of time. And that is something that is more valuable than any currency. And so Rachel has been incredibly helpful, and I am very grateful for her being here. And that's it. I'm going to let her take it away and let her run the show from here on. So everybody, I know you guys are muted, but please welcome.
Thank you.
Rachel, thank you for being here. Really appreciate it.
No problem. Thank you so much for having me today. I can't wait to give everyone a lot of value. And if anyone has any questions, please let us know. Cassie and I are both licensed by the IRS. I'm the owner of Empire Tax Professionals, and Cassie is the senior manager in the accounting department. So anything you need, let us know, and we'll definitely answer your questions. So today I'm going to talk about top 7 tax tips specifically for fitness consultants, and everything, and not really everything, but most of the things that you need to know so you could at least save, at least at a minimum. I mean, we try at least $10,000 in taxes every single year moving forward. So let's do this. Okay, perfect. So today we're going to cover entity selection, bookkeeping best practices, payroll 101, estimated tax payments, and what you need to know when you're hiring an accountant, because we actually had a few prospects came and they thought that their accountants were CPAs when they weren't. And there's just a lot of designations out there that you want to be familiar with to make sure that you're hiring the right person for your finances, and so much more.
Hey, Rachel, can I put you on pause for 1 second?
Yeah, sure.
I'm so sorry to interrupt. If anybody's watching this live stream in our group, and if you have any questions for Rachel, just go ahead and comment on the video. Rachel will be happy to answer, or if they're for us as a team, we'll be happy to direct you. So if you're not inside our group, but you still have questions, just feel free to comment below the video and we'll get to those questions. I'm monitoring them for you.
Perfect. Great. Thank you. So my goal for you is to help you save taxes just from this presentation today, help you think about the questions that you need to ask your accountant, and help you decide if it's time to hire someone else. So a little bit about me. I'm the CEO and founder of Empire Tax Professionals. Actually, oops, what happened? There you go. And I saved one specific client $400,000 in taxes, and we actually saved his marriage. So, because he was about to get divorced, and I think that's a huge thing. And we were able to help him, save his marriage just because of that huge tax bill that his wife did not expect. We prepared over 10,000 tax returns, and I think it's a lot more than that now. We specialize in accounting, helping coaches, consultants, e-commerce sellers, business owners all over the 50 states. We have a team of 30, and that includes marketing staff, accountants, CPAs, bookkeepers, etc. We are both licensed by the IRS and in 50 states, and we love helping small business owners save money on taxes. That's our passion, and I'll explain to you exactly why. So when I was 18 years old, I think, I don't know who it was, but like U.S. Marshals broke my door, knocked it down, and they arrested my father. And I said, oh my God, my father is an amazing man. What exactly happened? So it turned out, after going to like the 26th Federal Plaza or whatever in Wall Street, my father didn't pay his taxes. And even at the time, my father was a car dealer. He hired an accountant, and he said, I don't get what happened. He hired an accountant. He was a really good businessman, and he relied on his accountant, but his accountant was not a CPA. We always thought that his accountant was a CPA. We always thought that his accountant was going to prepare the specific sales tax returns, and he did not know, just like any business owner does not know what their obligations are, what they need to do. They need to file payroll. They need to file sales tax. He ended up paying $1.2 million in taxes because he didn't know that he needed to collect the sales tax on the cars that he was selling. And I remember coming back home and I'm like, oh my God, this is never going to happen again. I'm going to do my all to help business owners and educate them and let them know exactly what they need to do so they can save money and, most importantly, be compliant, and give them the right education by letting them know, hey, you need to file your sales tax, you need to do payroll, and just, you know, just educate people, because a lot of accountants don't do that. So tax tip number one, choosing the right entity. So on this specific, you know, tax, you know, strategy, we were able to help one client save $15,000. The second client last week, we were able to help them save $10,000 in taxes. And that's in every single year. You know, it's because they're people that come to us and, you know, they want to start their entity, and they start off as sole proprietors, and they end up overpaying in taxes. And a lot of times, like, you go to an attorney and they don't even know what entity makes the most sense for you. So just this one strategy, you're able to save a minimum of $10,000, depending on what your net income is. Obviously, if you're not making much, the savings is going to be a lot less. If you're making a lot more, then the savings will be a lot more. And a lot of entrepreneurs have intentions of growing their company and, you know, making millions or a couple of $100,000s. So the entity selection. So advantages of disadvantages of every single type. So a sole proprietor, that's the most common type. You're a freelancer, you want to quit your job, you're not really sure what entity makes the most sense. So most people become a sole proprietor. The advantage is that it has the least amount of record keeping. So you don't need to, you know, pay yourself on payroll. And actually, we have a lot of people that not a lot, but we have clients that spoke to us where they were sole proprietors. They did not know that they were not allowed to be on payroll legally. They go to a payroll service company and they would just take their business because they're robots, and they won't even look at their entity selection. They won't even look at, they won't ask specific questions to see if they're allowed to even be on payroll. So we had actually a few clients that we had to switch it over. But a sole proprietor, again, like I mentioned, the least amount is record keeping. You don't need to put yourself on payroll, which is not such a big deal. But the disadvantage is that you do end up paying very high taxes, and you have a very high risk of getting audited. And if you ever get audited, you speak to an IRS agent that doesn't really work with a lot of large businesses. So for example, if you want to go to a coaching event, and they're going to start asking you, why do you need to go to that coaching event? You're only making $30,000 a year, or you're only making $100,000 a year. They won't understand your mindset. They won't understand that you have a mindset of growth. And sometimes they may disallow your expense because, it really depends. You need to prove it. And it's just a little bit harder to speak to a lower level agent versus if you're an S Corp, they would just normally allow it. And again, it depends. But a single member LLC is the second entity. And if you form a single member LLC and you don't make an election to be treated as a S corporation, for example, you will still be treated as a sole proprietor for tax purposes. So you want to make sure that, you are protected. So a single member LLC gives you the protection that you need. A sole proprietor does not give you the protection that you need. But both for tax purposes, it's really the same exact thing, and you report it on your individual tax return. The next entity is a multi-member. It's a multi-member LLC partnership, very similar to an LLC, but the difference here is you have more than two people, and you, again, same exact reason. You are protected. You do pay high taxes, and you don't have a high risk of getting audited with a multi-member LLC. But the disadvantage is you do overpay in taxes. A C corporation, sorry, I can't see my screen. A C corporation, the advantage is that you do pay a 21% flat tax rate, but most of our companies are not C corporations. You would need to really understand why you would want to be a C corporation, and there's disadvantages and advantages, but this is not really one of the most common entities out there. S corporation is usually the most common entities out there, and usually business owners that are in the US that really want to grow their company, if they're making, like, I would say $50,000 to $60,000 gross, then sometimes it does make sense for them to convert to an S corp. It really depends on their specific situation, and if they have intentions of growth, then I would recommend for most business owners to become an S Corp, but it really depends. The advantages are there are tax savings. You have lower Social Security taxes for the owners. There's less audit risks than the sole proprietors. You are able to deduct additional expenses. And the disadvantages are there, you need to have bookkeeping, you need to file payroll, because as an owner, you need to pay yourself a reasonable compensation. You need, as an officer also, you need to be on payroll, and you need to file your corporate returns at the end of the year. There are two filings, one for the S corporation and one for the individual. It's an extra filing. It is additional accounting expense, but the tax savings is it's so much more, and it benefits the business owner most of the time. So choosing the proper entity does help you pay the legal tax, the minimum legal tax possible, and it helps you stay protected. It also, like I said, reduces the risks of getting audited.
Just something to add with that. You know, it's, you know, S corporation always seems like it's the best way to go, but you know, like Rachel said before, just keep in mind that it's on a case-by-case basis. So if you're, this is when you want to consult with an accountant to decide what's the best for you based on your exact situation, because there are state taxes, there's some states that tax S corps that do not make it beneficial for you to even change to an S corp, or there's some, if you're not making a certain amount of income, your payroll taxes are going to end up being the same as if you're just a single member LLC. So you always want to consult with a professional before you actually make this decision to make an election to be an S corp or open an entity.
Right, perfect. Thank you, Cassie. And this is just a, you know, general chart of what, you know, just a recap. So a sole proprietor, like I mentioned, it's one owner. Partnership is multiple. It could be unlimited. A C corporation also has unlimited number of shareholders. S corporation can be up to 100. And then LLCs also could be unlimited members. The liability is what you should also be looking at, because if anybody decides to sue you, you want to make sure that you are protected. And that when you go to an attorney, this is the only thing that they look at. I actually went to an attorney when I just first started my business 16 years ago. And I said, hey, I want to open my entity. And he opened a C corporation for me. He did not tell me, should I be an S corp? He did not give me any suggestions. He just said, hey, it does make sense for you to open a C corp. Have a good day. Sign this paper. Bye. And I was like, where's the advice? Nothing. And I didn't know until 2 years later when I worked in an accounting firm. I said, okay, I need to become an S corp, and I need to look at the entity from a tax perspective, because I don't want to overpay in taxes. Also, most attorneys highly recommend single member LLCs, and they don't understand that single member LLCs pay more money in taxes. So you want to make sure that if you are a single member LLC, you are able to convert your single member LLC to an S corp. It's just a little bit confusing. It has to be 75 days from the time that you open the entity. And again, like Cassie mentioned, you do want to speak to a professional, because there's so many things that you may forget. And if you forget one thing, it's going to just throw everything off.
So can I interject real quick?
Yeah, sure.
So I had somebody reach out to me just yesterday telling me that his either attorney or his accountant said that he didn't need an entity, period. And it kind of blew my mind, because for as long as I could remember, I mean, the only thing I knew was either sole proprietorship or LLC. And so I just formed an LLC. You guys are now helping me convert that to an S corp to help me save money. But the personal liability is the biggest thing. And we as Fit Pros work in an industry where shit happens and injuries happen. And if somebody gets injured on your watch, no matter how good your waiver is, no matter how good your release of injury and indemnity, all that stuff is, if you get sued, those papers don't really mean anything, right? So it's going to be really important that you have some form of entity just to protect your assets, because 100%. You personal trainers, you online trainers, you garage gym owners, you brick and mortar gym owners, if your clients are signing agreements with you as the individual, you're screwed. For sure. And so this stuff is really important. And I know it might seem a little daunting at first, but just choosing one is better than having none. And then getting into the nitty gritty is where, like, not only are you protecting yourself, but now you're saving money instead of burning it on the wrong entity.
Exactly. 100%. And just to add to that a little bit is, I mean, I guess who he spoke to technically is not wrong. He doesn't need to open an entity, but it's not the best advice. You know, people like to cut that corner and not pay the cost, but in the long run, it's definitely more beneficial. The opposite side of that is that, you know, if you're doing online coaching or if you're training others at other gyms, you know, you maybe can get away with it. But if you have your own personal training studio, if you have your own gym, not having your own entity, and you have your own building or place of business, not having your own entity for that is not a very smart move at all. You definitely want to start off with an entity for that. But like I said, if you're online coaching, just starting without an entity, you can do that. And then as things kind of pick up, you can open an entity. But, you know, it's always best to kind of do it from the beginning and just start fresh and do it right from the beginning instead of having to switch everything over.
Right. I would also probably recommend, you know, starting off as a single member LLC if they are small, and then later, a year or two later, once they see that it does make sense, they could always convert that LLC to an S Corp. But then at least they have, like, for branding and marketing purposes, you have that company name, you have that, you know, for Google, for Yelp or whatever, you're just building your brand from the very beginning. I started my company 16 years ago, and before I even had a client, I opened a company immediately because I knew what my intention is, and I knew that I wanted to make a lot of money. So it really depends on what the person's goals are. Yeah. Okay, so tax tip number 2 is bookkeeping best practices. And a lot of business owners don't really care much about the bookkeeping, especially when we speak to them on the phone. You know, I had a client yesterday who goes, yeah, Rachel, I could do the bookkeeping myself. I could add all the income and expenses to Excel. And I asked him, do you have any tax education? He tells me no. How do you know what, you know, is what you know, what if an expense is deductible? He goes, I don't know. So I said, okay, so what you're going to really do is data entry. You're going to waste your time and you won't know how to legally deduct every single expense. And that's what's bookkeeping. It's not really record keeping where you're doing data entry. It's bookkeeping to make sure that every single expense is legally deductible. And if you're not an accountant, if you didn't, you know, if you don't really prepare tax returns and you don't know how the IRS thinks about certain expenses, I don't recommend for anyone doing their bookkeeping. I mean, unless like it's just basic, if it's telephone, internet, but there may be some expenses that you may not know how to deduct, such as home office expenses, vehicle expenses, you know, ATM cash withdrawals, which I'll get to at the end of this. So first things first is you want to set up your bookkeeping using QuickBooks Online. There are a lot of people that use, you know, QuickBooks Desktop, they use Xero. We recommend QuickBooks Online because it's a much better software. We actually use it exclusively for all of our clients. Second thing is you want to make sure that you're reconciling all of your bank, credit card statements, Stripe, PayPal every single month. Now, I'm not saying that you're going to do this on your own, but when you speak to a bookkeeper, or if you ever hire a bookkeeper or an accountant, this is how you're going to know that they're doing the right job. There are bookkeepers out there that don't reconcile your bank accounts, and there may be an expense that may be missed, or a credit card transaction that may be missed. We actually had a client, an Amazon seller, where the bookkeeper reconciled everything up until June, and the accountant prepared their returns, and they forgot to reconcile like 3 or 4 months worth of, well, actually here 6 months. We ended up amending their returns, and they got like a $50,000 or $40,000 refund because they didn't reconcile up until the end. You want to make sure that every single, you know, from the very beginning, January 1st up until December 31st, everything is being reconciled. All your bank accounts, all your credit card accounts, even if it's like a $15 bank service charge, you want to, you know, it's just continuous, and you just want to make sure that every single thing is there. You never want to hire a VA to do your bookkeeping because they don't understand the tax code. Again, like I mentioned, they may say ATM withdrawals are personal. We had a few clients that had ClickFunnels, and they had like landing pages. The bookkeeper assumed that it was a personal expense, and she did not deduct any of them. So, or Kajabi, for example, it's an online course, and they may think it's a game, it's a video game online. A lot of bookkeepers may think that, but or VAs overseas, they may not know what these expenses are. We actually had someone think Con Ed was continuing education, and it was like, you know, not added according to the right code. So when you have other people doing your bookkeeping, it may not be 100% accurate, especially if they're not in the US or they don't know the online world. The fourth thing is you want to categorize all your expenses according to the IRS categories. Most bookkeepers don't know how to prepare the tax return. So they'll just do the bookkeeping based on, I don't know, the QuickBooks codes, I guess, but they don't really prepare financials based on the IRS code most of the time. Fifth is never do your bookkeeping. I can't see, sorry. Yourself. It's cheaper to hire someone to do it for you because time is really money. 6, hire accountants who specialize in working with personal trainers or coaches to do the bookkeeping for you. Deposit all of your business income in one bank account. We've seen clients, or prospects get audited because they deposit $5,000 here or $1,000 here, and then the IRS says you only reported, let's say $50,000 on your tax return, but your deposits show, X amount. Why is there a discrepancy? You want to make sure that all of your income is being reported, because that's the first thing. If you ever get audited, that's what they do, like a bank, a bank account a bank income analysis, and you want to make sure that that matches with your bank statements and line 1 on the corporate return, or individual return. Deposit all of your income in one bank account, like I mentioned here. Pay all of your business expenses from your business bank account or business credit cards. So there are a lot of people that, pay their expenses through personal. Some of it is business. If it's a business transaction or it's a business expense, pay it from your business account. If you want to get points, get a credit card and pay it all from your business credit card, and then let the business account pay the credit card. So it's just consistent.
Yeah, and just to add to that, why that's extremely important, if you were to commingle your business and personal accounts, even if you have a business account, but you're paying your personal expenses from the business and you're just maybe not deducting it as an expense, but you're applying it as a distribution to yourself, so it doesn't really reduce your taxes. If you were ever to be audited, the IRS can always come back and say, well, if that was personal, the rest of this stuff could be personal also. So then there's a very thin line that the IRS will let a lot of things slide, or you'd have to go through hoops trying to prove and show that it's actually business and not something personal. For example, if you could have Amazon purchases that are personal go through your business, but you could have Amazon purchases that are business related. So they could say, nope, all Amazon is going to be personal. I don't care what you show me. And they can move that over. And your tax bill is maybe double, triple, depending on how much, they're actually going to disallow. So making sure that you keep your records clean and have your personal out of personal, your business out of business, take distributions if needed, and just keep your books clean will always help you if you ever were to be audited.
Perfect. I love that. Thank you, Cassie. So reminder, if you want to make sure that every single expense is properly being deducted, you want to make sure that you are hiring experienced accountants, who can help you deduct every single expense legally. VAs would not know how to classify expenses like home office deductions, cash or ATM withdrawals. So if you pay someone cash, most of the time VAs would assume, oh, this is personal, or the client didn't give me, like I see a lot of people or VAs or bookkeepers assume, they say the client didn't tell me what this cash is for, so I'm just going to assume it's personal. Business owners are extremely busy. If you're hiring an accountant, you would assume for them to ask you for the additional credit card statements, like I mentioned earlier, for the, some expenses that they have questions for. We're not going to randomly go into our bank account and say, hey, I forgot to give you this cash ATM withdrawal that I did 6 months ago. You want an accountant that's proactive and will ask you specific questions, because their goal should be to legally deduct every single expense for you. And then continuing education, like I mentioned with the Con Ed example, and then marketing software. They may not know what ClickFunnels is, Kajabi, etc. So they won't also distinguish between personal and business. Like Cassie mentioned, you really want to make sure that all personal expenses are being paid from your personal accounts, and all your business expenses are strictly being paid from your business account. And also, you may, if the IRS ever sees that you have a lot of personal transactions coming from your business, they may pierce the corporate veil, which means that because you're commingling, you may not be protected. And then that's when, things get really bad and you would need an attorney to protect you. It's just easier to, start fresh and keep it separate. So good record keeping will help you pay less taxes and avoid penalties and interest, file your returns timely and accurately, survive an IRS audit, monitor the progress of your business if you're reviewing your financial statements every single month, and identify the sources of your income. So online coaching, it could be brick and mortar location. You would want to see where your money is coming from. So you're able to, you know, have goals for the next month and say, okay, if you made $10,000 for 1 month, what are you able to do to hit $20,000 on the following month? Or if you're selling, you know, specific meal replacements or something in your gym, you're able to see how much money came specifically from that, how much money came from online coaching and things like that. And you're able to make really solid decisions for the next month versus bookkeepers. Normally they do a full year's worth of work, they file your return, and you don't even, I mean, it's just not even enough time for you to make decisions for based on the prior year. You would need numbers and your financial statements every single month so you can plan for the future. So this is a sample of, we just made this up, by the way, and I'm telling you this because, you know, if you ever, or if the IRS ever sees that the numbers are this exact, then you are going to 100% get audited. So if I ever see a return like this, it would scream to me that a person just probably prepared it on their own. And we just estimated the numbers, like, let's say computer and internet expense should really be, let's say $89 or something like that. I did this on purpose because we just wants to give you reasonable numbers. But if your bookkeeper or accountant really put like a lot of the numbers at the end with 0 or 5, then you do have a very high risk of getting audited, and the IRS would assume that all of it was estimated and you're not allowed to estimate anything on your tax returns. Unless it's like rent or professional fees, it makes sense for you to pay an accountant $2,000, $3,000, or $500 flat rate. But a lot of these things like advertising, marketing, you know, it should be whatever it is, but we just wants to give you an example here. Your gym memberships, if you actually go to the gym and you train at the gym, they are deductible. If I want to go to the gym, it would not be deductible because it's not directly related to my business. But because you guys work at the gym, then it would be deductible specifically for you because it's ordinary and necessary for your specific business, which are the two things that the IRS requires for you to deduct for any expense. So payroll 101. I hope I'm not going too fast. I'm good.
I think you're good. Yeah. Again, I dropped this in the chat. So anybody who's watching the live stream in the group, feel free to drop a comment. If you have a quick question for Rachel, any of you gorillas who are here with me now, just drop your questions in the chat so that as she approaches each new tax tip, she can get to you. So any questions that you do have watching the live stream, drop in the comments. You gorillas inside, just drop in the chat and we'll make sure that we get to you. Perfect.
Thank you. So payroll 101. So know the differences between an independent contractor and an employee. This is huge. There are a lot of, you know, gym owners or business owners that misclassify their employees. They should really, or independent contractors, some people should really be employees. And then they pay them as independent contractors and the IRS audits them. And then they may go back up to 3 years to reclassify their, you know, the payroll, and then they need to, I actually had a daycare, you know, they had their employees become, they paid their employees as independent contractors. They got audited and the IRS required them to file 3 years worth of payroll returns. And it was just a mess. So know the difference between an independent contractor and an employee. And if you don't know, then you could always speak to an accountant and they'll tell you the difference. Department of Labor audits are the worst, and they're always looking for very high 1099 amounts, especially if you pay to an individual person. So let's say you pay my company, Empire Tax Professionals. They're not going to really question. Usually a company, if you pay to a company name, but if you pay my name, Rachel Mikolov, you know, 90,000 or 30,000, the first thing they're going to say, who is this person? Why are you paying them? Let me see invoices. And they're going to want you to prove to them that I'm an independent contractor and not an employee. So if you do have a relationship with someone, or if you a business relationship, then you should always pay. And if they are a 1099, you should really pay them to their corporation or LLC. Just makes things cleaner. Collect W-9 forms from all independent contractors, collect W-4 and I-9 forms from all employees, and have workers' comp insurance. And obviously check your state to see if it requires it, but New York State and I think California requires workers' comp. And the penalties are extremely high if you don't have this. Even if you have an employee working for 1 day, you want to make sure that you have the proper coverage before you hire anyone. And also I want to add, a lot of these like online payroll service companies, they don't really tell you, I mean, actually some of them do, but I had a client who got I think it was like $108,000 fine for not having workers' comp insurance, and her payroll provider did not tell her that she needed it. And before processing payroll, it's just common sense to ask, hey, I'm about to process this payroll. Do you have workers' comp insurance? We're not insurance agents, but we want to make sure that you're protected. And they didn't ask her anything. And she literally got like a huge fine, but we were able to reduce it to like $2,000. I think it's $2,125. But I mean, she got lucky. But just moving forward, you always want to make sure that you have the proper insurances before hiring anyone.
With workers' comp also, even if you don't have employees and you just hire contractors, you are still required to have workers' comp. It'll just be a different rate. So if you do have a personal gym and you're hiring, the trainers there are paid as contractors, you still need to get a workers' comp policy because they are on your premise and they need to have their own workers' comp policy to show you that they're covered. And then you show that to your workers' comp broker. But that's just something you definitely want to discuss with your insurance broker.
Perfect. Thank you, Cassie. Good tip. I didn't think about that. So tax tip number 4 is pay your estimated taxes every single quarter. You want to know the specific dates of when you pay the estimated taxes, reasons why you want to pay your estimated tax quarterly. If you owe more than $1,000, you do get a fine if you don't pay your estimated tax payments. So this is why we highly recommend for clients to, get your bookkeeping done on a monthly basis so you can see exactly what your gross is, what your net is, and then you start asking questions. Should I pay myself a payroll or a higher payroll amount so I could reduce the net, or what is my net? And you're going to pay exactly what you're supposed to pay to the IRS versus a lot of accountants, they say, okay, what was your tax bill last year? They'll say, okay, the client would say $10,000. Oh, you'll just do the safe harbor rule, which is pay $2,500 per quarter. And usually when you pay 100% of the prior year, you should be fine. But I always tell my clients, you don't want to overpay the IRS and you don't want to underpay. And even if you're going to get a refund at the end, you just don't want that. You want to make sure that you're paying exactly what you owe every single quarter the right way. And the only way that you could do that is really knowing your numbers every single month, every single quarter, looking at your net and remitting that payment to the IRS and your state every quarter. So these are the specific dates. You could take a screenshot if you would like. April 15th, June 15th, September 15th, and then these are the 4th payments. And corporations also have an estimated tax, and so do individuals. And again, it really depends on the entity. It is a little bit complex. If you're making enough money where you need to make estimated tax payments, it is always best for you to hire an accountant so they could give you guidance. Sorry, Cassie.
Just wanted to add that, everyone gets kind of confused that April 15th is tax day. That's not when your taxes are actually due. You are required to make payment of your taxes to get you under $1,000 by January 15th. So if you owe more than $1,000 to the IRS on your tax return that you file by April 15th, your penalty for, you wouldn't get a penalty for late filing because you filed the return timely, but you would get a late payment penalty because you're not making the proper estimated payments and you should be making them quarterly and by January 15th. And they want you to get either over so that you're going to get a refund or relatively close to what your balance is going to be, which is what that $1,000 threshold is. So just keep that in mind. It's January 15th, not April 15th. Your returns due April 15th, your taxes due January 15th.
Exactly. I think most business owners don't even know that. And then they think April 15th, and then they like get notices and they're wondering why they're getting notices. And it's because the accountants never guided them properly. Okay. Tax tip number 4, important tax deductions. So in order for you to deduct a proper expense, it has to be ordinary and necessary to your specific business. You need to know what's deductible. And I have a list of common tax deductions for you. Telephone, internet, computer, coaching fees, office supplies, an accounting service, a bookkeeping service, bringing on a virtual assistant, conferences, for your specific industry, marketing conferences, if you want to grow your company, would be deductible. A home office deduction, mileage, overseas VAs, prospecting softwares, software, and then gym memberships if you don't own your specific facility, because you would have rent or you would go to other gym memberships in order for you to coach your clients.
So you're saying that this program and this coach is a tax deductible fee?
Yes.
Whoa.
That's why I highlighted it.
Awesome.
Yes, it is, because they want to grow their company. And I mean, I grew my company only through a coach. Like, my coach helped me save years. And I'm telling you, I would say 10 to 15 years of mistakes. And because it was like, honestly, I mean, we doubled our revenue because of our coach, and it is 100% deductible. I obviously pay a lot more taxes, and which is why the IRS says you can deduct those coaching fees, because the purpose of you hiring a coach is for you to make more money and, you know, be more productive, save more time, save money. And I always say, you either have a mentor or you make mistakes on your own, waste time, and, you know, do it yourself. And nobody really wants to do that. Just save the time and money and hire someone that did it before, so you can grow your company. Yep. So hiring an accountant. You want to ask these specific questions before hiring an accountant. And I'm telling you, I had so many situations. One is like my father, where he thought that he had a CPA and everyone was using him in the community. His friend was using him, everyone. It's just so common where you hire an accountant and they say, oh, this person referred me, or whatever, until you have a problem. We also had a recent client who their accountant went to jail because their accountant was not licensed, and the accountant was stealing money from them, whatever. But then when we Googled it up, she's like, yeah, Rachel, that person is a CPA. I trusted him. And when we Googled his name, he was not a CPA. He doesn't have any, you know, high level authority. Like, we're enrolled agents are governed by specific, you know, OPR by the IRS, and CPAs are governed by specific. So people and attorneys are also looked at by a higher department. Most accountants that are not licensed, usually they're not, but you want to make sure that you're, you know, also licensed enrolled agents have Circular 230, which we have specific guidelines such as confidentiality. We need to make sure we're not mentioning anyone's name, who our clients are. Like, I would never mention that you're a client. You could mention it on your own, but I would never mention you know, that you're a client, because that's, even the name of the client is 100% confidential. Okay, so questions to ask your accountant. Are you a licensed enrolled agent or a CPA? You really want to know the difference. An enrolled agent is licensed in 50 states. A CPA is licensed in one state, in the state that they took their license in. Attorneys are the same way. They're only licensed in the state that they took their license. They usually can't you know, represent you in different states. That other state won't they won't speak to you. But licensed enrolled agent is a federal license, and it's licensed by the IRS. Oops, sorry. 2, do you offer bookkeeping services? Most CPAs and enrolled agents, they don't offer bookkeeping services. They want to have this like 4-month business where they just prepare returns. After April 15th, they take a month off, or, you know, they take their summers off, and then they come back for the extension season, which is September 15th and October 15th. They're also not really available during the summer. And that is when the IRS sends out all these notices. And we get a lot of clients at July and August because most of their accountants are not picking up the phones. But, you know, we work full all year, literally. And do you want to ask, like, do you offer payroll services? Do you offer sales tax, corporate taxes, individual taxes? It's just so much easier to speak to one business owner. And that's how we get most of our clients. They're so tired of going to a bookkeeper or a payroll service provider who doesn't know what entity you are, or who doesn't really understand you know, what your bookkeeping numbers are. So they can't really advise you on how much your payroll should be. Corporate taxes, at the end of the year, you need to start collecting and running around. Okay, bookkeeper, give me your financial statements. Payroll, give me your W-2, W-3s, and all the 940s. So everything is in your corporate taxes. And if you miss one thing, you may get audited because you know, somebody miscommunicated something, or it's just if you have multiple people in your financial team, you just have a higher risk of getting audited, in my opinion. More things are just going to become messy. And I think it's just, as a business owner, it's really annoying speaking to multiple people, and a bookkeeper normally won't speak to a CPA. A CPA will not pick up the phone and speak to the bookkeeper. They'll just assume that everything is done properly until you have a problem. Number 3, are you open all year round? And if you're not, do you have staff that would be there to support you? So today I actually had a client who's refinancing on his mortgage. and he's asking me for copies of his returns. If I was on a vacation, I have 30 other people that could get him his returns. Most people refinance their homes in July, August, or I mean, it really doesn't, I don't know when the exact months are, but we get a lot of, requests during the summertime, and you just want to make sure that your accountant is available all year round to be available for you. Number 4, how fast you respond to emails and communicate with clients. Again, when I speak to prospects, they go, I emailed my accountant a month ago, 2 months ago, and I have no response. And that's just, I mean, I don't know. I don't know how some accountants work that way, but we have a policy where we do our best to respond within 24 to 48 hours, depending on what the client asks for. If a client has a New York State notice, sometimes it takes a little bit longer because we need to check with the state, or we need to check with the IRS to make sure that the bill is valid before they make the payment. But normally it should be within a few days. You should really get a response from your accountants. Number 5, do you send the copies of the returns to the clients before you submit them to the IRS? Again, I had a client that left his accountant who filed the returns without him reviewing it. And he tells me, I don't even know how I had an $8,000 tax bill. His accountant filed his returns April 15th, and the next day she went on vacation. So he had to wait a whole week to find out what happened, why he owes. And I'm like, are you kidding? How do you even have, I was just shocked. And he's like, I can't deal with it anymore. She stresses me out. And he's been a client for like 2 or 3 years. Number 6, do you have experience working with the fitness professionals? And this is based on your specific niche, because a lot of accountants may say gym memberships may not be deductible. But if you have experience with working with your specific niche and traveling from one gym to another, there are specific expenses because of your industry that you are able to deduct, specifically, let's say coaching, your gas and traveling, because that would be a huge expense for you, because sometimes if you don't have your own gym and you're an online trainer or whatever, you may deduct specific expenses.
And just with that, you're going to run into a lot of old school accountants. The tax code has not been updated, but it is starting to change and evolve now that we're seeing the digital space be so prevalent with, Instagram and influencers. And, a lot of fitness professionals are doing everything online, but also your image is very important for your business. So even if you're just doing online meal plans or online training programs, you keeping up with your own body is now very easy to fight off in court, where the IRS is always going to try and fight that. But we're seeing things change where a lot of these things that weren't deductible before are now going to be deductible, because it's so easy to prove how important that is to your business.
100%. I personally would probably not hire a personal trainer if they were not fit themselves.
Exactly.
Right?
100%.
Right. Or like, I mean, I don't know if you would hire an accountant who has like $1 million in debt or doesn't have their finances in order. Same exact thing.
Doesn't pay their taxes.
Exactly. Right. Exactly. Right. Okay, so 7 is, do you pay my taxes quarterly? So that's another big problem that we have. A lot of business owners say, like, there's a lot of miscommunication. So the CPA gives the vouchers to the client. The client assumes that they file it. So they file these vouchers, or they forget about it in their email. And then at the end of the year, they have this unexpected tax bill because the CPA told the client that they need to mail these vouchers, make the payment by check, and they never asked for a confirmation. So you want your CPA or your accountant to pay these quarterly payments for you. So what we do in our company is we say, hey, Mr. So-and-so, you owe $500 or $1,000. Do you authorize us to make this payment for you? You say, yes, make the payment. That's it. That's all we ask for. Give us a yes and we'll do it for you. We'll put it in your secure portal, and that's what your accountant should be doing for you. Put it in your secure portal under estimated taxes under that year and give you a confirmation. So at the end of the year, you're able to take a credit for all the payments that you made. And it's not like, oh, did you make that payment? Did you forget? I told you to do so. It's just, all we need is a yes, and business owners need to delegate as much as you can so you can work on your genius zone. Number 8, what happens if I get audited? Can you represent me? Again, like I mentioned before, CPAs can only represent you in their state. Enrolled agents can represent you in 50 states, and that's really important. People get notices all the time. You don't want to look for someone else to help you with an IRS notice. We always get that. That's how we get a lot of leads. clients say, oh, my accountant can help me with this notice. Can you help me? They see how responsive we are, and then they just switch over to us. Number 9, do they offer tax planning services? Same exact thing. If you have a huge net income, a very high net income, and most gym owners will have, and actually online trainers, because you're very profitable, some of them are, you're able, if you want to make sure that you're paying the least amount of taxes legally. So we think of strategies such as hiring your kids or renting your home to your business, or there's so many things that you're able to do before the year ends so you can reduce your taxable liability. And a lot of accountants may just do tax prep, and they may not look at proactive tax strategies to reduce your taxable liability, because nobody wants to overpay the IRS. You want to make sure that your accountant is behind you and doing everything you can to pay the least amount of taxes legally. We had a client who's an insurance agent. I mean, he's like 65 years old or like in his 60s, and he has a 100K tax bill. He was a sole proprietor all of his life. And I mean, the amount of taxes that he overpaid was just crazy. And he needs to continue working because he overpaid in taxes. And it's just really sad. Number 10, make sure they have the proper amount of years of experience. So there are a lot of people that just started out and they don't have the proper years of experience. You want to make sure that they are experienced to help you with everything you need. And 11, make sure that they're not a solo practitioner and they have a team to help them when they're backed up. So again, we had clients that left, the accountant passed away, or the accountant was in the hospital. They needed copies of returns and they didn't hear anything, which is why some accountants go MIA. And now they're like looking for, what was filed, what was not filed. And if only you would hear the clients on the phone, it's really stressful. So you want to make sure that they're a corporation, they're a legit business, and they have a team to support them. And then, one of my employees wrote this: burn your calories with exercise. Instead of going from service provider to service provider. I thought it was funny because it's like a fitness thing. It's best to hire a virtual accounting firm that can help you with everything you need, all under one roof. Here's what this will accomplish. Again, it would save you more time. Nothing will get lost in translation between your bookkeeper, accountant, and payroll service provider. And again, from experience, I've seen business owners really stressed, pay a lot more money in fees and in taxes because they have like multiple people in their finances. You'll save money. If there are any IRS or state issues, they would be able to help, and a lot more. So I'm all set. Any questions?
A lot of info. Awesome.
Yes, I know. I'm sorry.
No, don't be sorry. The more, the better. And I'm sure there's a lot to digest. And those of you who are in the inner circle, with Rachel's permission, we're going to have this, what's it called? Presentation downloadable for you so that you guys can review it again. Eva, who's a client success coach in our program, says I need to get my shit together. Yeah, just so you guys know, I think I signed up in May, and just the amount of relief that it has brought me and how on it they are with what they need me to do and how quickly they respond to all of my requests is insane. I can't speak for other companies. I can only speak for Rachel and her team. But when we were moving from LLC to S Corp, I mean, one of the things that you mentioned is how quickly do they respond. And I've talked to other people who are like, oh yeah, my accountant takes me weeks to get back to me. And it was like, if I sent them an email on a Monday, I would be surprised if it took me more than 24 hours to get a response. Usually it was same day. But those kind of quick things, most of you who are in this program know I'm pretty quick to act. And they are just as quick. And having that is a huge relief when you're hiring somebody to deal with your money. And so that's really something of true value to me. And I know to you guys who are all about taking action and having that action be as fast as possible. And guys, we've got Rachel and Cassie for another 10 minutes. So any questions that you might have for them, please go ahead and ask. If you're again in the group and you have any questions, write them in the comments. We're here for your success. Yep. CJ, go ahead.
I'll jump in. I came in late, so you might have answered this. Hi, Rachel. Hi, Cassie. Hi. So 2 years ago, I switched from being a sole proprietor or independent contractor to an S corporation with my CPA, which I don't know if he is a CPA. I think he is, but I could ask that question. what would you recommend for trainers or people who own their own business? Is there one better than the other? What would you guys recommend? Is S Corp a good choice? I know there's so many different. C Corp.
Right.
What would you guys
want to answer that?
Yeah. So yeah, we definitely did go over this. So definitely go back to the slides, because you'll get like this obviously information where you can visualize it and read it, go back and kind of reference it. But it always depends on where your business is at. You know, it always ends up being that the S Corp is typically 9 out of 10 times the best option for you. But there's so many different factors that go into that. The most important is that reasonable compensation has to be paid to the owner of the S Corp, which a lot of accountants, smaller accountants, or those who just open entities for you don't let you know that. So, you know, even if if you have a net income of $30,000, there's a lot of accountants that'll say, oh, you don't need to run payroll as an S Corp. That's a huge red flag for the IRS. So even if to the IRS, they're like, okay, but that whole $30,000 technically should have been your salary, because based on you running everything, you're bringing in all the money. If somebody else was to be paid this, you know, all of this would have been a W-2. So the IRS wants to get those payroll taxes in. So there's a thin line sometimes on what's best for those, depending on what your net income's looking like, what your gross, your net, your expenses. So it's a case by case basis, but yes, S Corp usually always ends up being the best. There's some, like Rachel said earlier, we always recommend starting out as an LLC, so that way later you can convert it into an S Corp when you're ready, when you hit that point. That way you don't have to bother with the additional costs of filing a tax return for the S Corp or running payroll through a payroll service. You just take care of your payroll taxes through your LLC on your individual tax return. But then there's some other factors in things that factor in. So
like the state also, you mentioned earlier, the state too, depending on what state you're in.
Right. So some states actually impose a tax on, for example, you know, we're here in New York City. New York City is not S Corp friendly because, you know, they're New York. Right. So your benefits, the large amount of tax savings you get as an S Corp are almost eliminated. Not always, but almost eliminated by that New York City S Corp tax. Same thing. Tennessee has one. But I think Tennessee, it hits LLCs also. So I think it's only sole proprietors that are excluded. But each state, it's different. So the states, your income, if you have other employees, things like that will definitely factor in depending on the case-by-case basis.
Got it. Thank you. And I'll go back and listen in, but thank you for that.
Yeah, there's some slides with a lot of good details on there also. So that, I mean, sometimes we're talking another language here. So I get it. It's
exactly.
When you guys talk to us, you know, it's kind of, we don't process it the same. So if you're able to read it, it may help.
Excellent. Yeah. Thanks, Cassie.
No problem.
Christian asked a pretty interesting question. Can a business give charitable gifts via time instead of money? And what I think, Christian, what you're asking is, if Christian's, you know, personal training hour is valued at, let's say, $200, and he gifts, you know, 5 training sessions, technically that's $1,000 in service that he's providing. So is that something that, while we're waiting for any other potential questions, I think you have another slide or two on how people can follow up with you and your team, Rachel.
Yep, forgot about that. So this is what we do. We take care of all of it. We have virtual CFO services where we do everything from A to Z. We're your accounting department. And then here, if you have any questions, you could email us, and that's our phone number.
Awesome. Guys in my inner circle, again, you're going to have these slides available to you in your education portal. Guys watching this inside of our free group, I'll make sure that you have the ability to contact Rachel and her team via those emails and that phone number. CJ, I saw you raise your hand again. You got another question?
Yeah, I had some identity theft happen, and I'm still working on it. I know you guys are in New York. It's just every time I call the IRS, they hang up on me. They're like, we're inundated with calls. You know, it's a machine. Yeah, I was told go to the IRS website and see what you could do there, and I tried that. I changed my email and password, not my email, but my password. Any other suggestions to try to get hold of the IRS?
At 7 a.m. probably.
7 a.m. Yep, I've tried that.
To be honest, and I'm not saying this to you know, to say hire us. That's not at all, because you could go absolutely anywhere. your best bet is most likely going to be hiring a professional. Getting through to the IRS is extremely hard if you're not licensed and have the practitioner line. Especially now, I'm going to tell you the IRS has about, I think it was like 13 million forms that they're behind on in
I think 35 million. I just saw this morning, 35 million.
It's something
returns.
Ridiculous. So even their staffing on the phone lines, that's why you always get a recording when you call the individual line. So it is extremely hard. But the other thing, like Rachel said, is calling first thing in the morning. I would press any prompt that isn't a refund. Don't press the refund prompt, and you could press any other one. Try every other number, and as long as you get to somebody, you could tell them your situation, and they'll transfer you to the right line. You may be on hold for another 2 hours, but at least they'll get you there. But that would be the best bet if you're not looking to hire someone to help you out with that.
Right. A lot of times you may even hold on 2 hours, and we had that years ago, and they would say, oh, sorry, we're closing, or, we can't even help you anymore. And they'll just hang up. So licensed professionals, like we have a specific service that we call a practitioner priority service, and it's only for licensed professionals. We also have a service that speeds up the process. So we normally could get on the phone with the IRS within like 5-10 minutes, sometimes even faster, only because we pay like $300 a month for this specific service. And like with the SBA, with the IRS, it's speed dials directly to the IRS. So it's just so much easier. And sometimes you may get on a hold with an IRS agent, and they may not even help you because their system is down. I mean, it's just a waste of time. So it would be really cheap if you just hired an accountant for this one specific service. You don't need a whole, monthly accounting for this. It's just a one standalone service. And we'll have, if you hire us or any accountant, they'll just have you sign a power of attorney, and you'll get the recent IRS notice so they understand exactly what's going on. And, they help you and get it finalized for you.
Excellent. Thanks, Rachel.
You're welcome.
Awesome, guys. Anything else for Rachel and Casey? Is it Casey or is it Cassie?
It is Cassie.
All right, I've been calling you Casey for an hour. Anything for Rachel and Cassie?
Cassie before.
Oh, I said, I'm just mixing it up. All right, guys. Rachel, Cassie, thank you so much for presenting. Really appreciate it. Gorillas, I'm going to kick you out. Justin, I know that we got a one-on-one. Go ahead and exit out. I'll shoot you a quick message when we're good to hop back in. Again, I've dropped in our group the information to reach out to Rachel directly, and you'll have a scheduling link for her and her team as well. Ladies, thank you so much for presenting. Stay on, stay back so we can debrief for a little bit. Gorillas, I'll talk to you guys later. I'll see you tomorrow for sales training. Everybody else, thank you very much for attending. We'll see you later.